How to get a personal loan. I've gotten my clients over $100,000 in personal loans, and I'm going to show you exactly how I did it and how you can do it too. I'm Dominique, and welcome to The Domino Effect, where we talk about everything business, entrepreneurship, and financial literacy. And today we're talking about how to get a personal loan. So what is a personal loan? It's a loan that doesn't require you to have to give up collateral, meaning you don't have to put up your house, you don't have to put up your car, or anything like that in exchange for the money. They're simply going to look at your credit, they're going to look at your history and how you've paid your bills and operated with other vendors. Then you can use the money for whatever you want. You can use it for home improvements. My client used it to start her business. Now, this is before she knew about business credit. So whether you need to consolidate debt, you need to do home repairs, you're starting a business, you have medical bills, a personal loan may be the option for you to get the cash that you need. So today I'm going to walk you through 8 steps to consider when taking out a personal loan. But before we get into that, I want to talk to you about why it might be a good option. If you need money for an emergency, then there's typically 3 ways to get it. You can borrow from family and friends. You can run out and get like a payday loan or a cash advance, which you absolutely don't want to do. They are extremely predatory and you want to avoid them at all costs. Interest on the payday loans goes up super high, 68, 100%, 300%. And the money just due back very quickly, like 1 to 2 weeks. And if you don't make payments, some of them even end up garnishing your wages. So avoid these. Then you also have credit cards. Now, credit cards are great, but they also come with fees. Some of them even getting up to 22 or 23%, whereas you could get a personal loan for maybe around 9%, 11%, 12%. So when you compare that way, a personal loan would be the cheaper option. So let's get into the steps that you need to take if you're going to get a personal loan. The first thing you want to do is know how much is this actually going to cost. Right? Before you actually take the money and accept it, make sure you're reading through the terms and conditions. A lot of loans come with success fees, origination fees, maybe other fees. So make sure that you are reading through that document because those fees typically get deducted. So let's say you're asking for $100,000. If those fees are deducted on the back end, you're typically going to get less. You might even walk away with $90,000 or $92,000. Make sure you're calculating your monthly payment. Are you going to be able to sustain it? Are you going to be able to make that payment? So make sure you're not falling behind. Because if you stay on track with your payments, then you just open up more opportunities with the lender to be able to offer you more. The next thing that you need to do is check your credit. Most lenders are going to require that you have a 680 credit score. Now, before they could be a little bit more flexible, but with everything changing, a lot of them really want to see that you have a 680 and that it's not just the 680, that you have your minimal inquiries, that you're making your payments on time. So if you have a lower credit score, just get to work and start fixing that now. You can check your report at annualcreditreport.com. You can go to Experian, Equifax, and TransUnion. And if you see anything that's on there that shouldn't be there, then make sure you're disputing right away. You can even go to LexisNexis, which is like the granddaddy of credit reports, and contact them. Request a credit report from LexisNexis because it will pull everything and you'll be able to see all of the information. Now, if you're in the fair range, you don't necessarily have the best credit, I recommend holding off unless you can get a co-signer that you trust and who's willing to work with you. But if you're not there yet, I wouldn't recommend just running out and seeing, just hoping that it'll go through, because it won't. So number 3 is really just consider your options. I mentioned a co-signer because if you have the ability to get one with someone that you trust, then you can use a co-signer to obtain the funding that you need. But remember, if you fail to pay this back, you're putting yourself and the co-signer at risk. Number 4 is choose your loan type. Lenders want to know what you're borrowing the money and what it's for. So be specific, know exactly what you're going to use the money for, know how long it's going to take for you to actually get a return, and know that you're going to be able to make those payments on time. Because if they ask you, hey, what are you going to use the money for? And your answer is, well, I don't really know, and you're not clear about where specifically the money is going to go and how they're going to get their money back, well, guess what? They're just going to deny you. They might not even tell you. They're just going to be like, oh, okay, hang up, and then you'll get a big fat denial. I highly recommend you check out our blog where we really break down all the different strategies to get around this. So let's talk about the different types of loans. So there are debt consolidation loans, which means you can take all of your payments and you can condense them down into one monthly payment. Ultimately, people do this if they can find a lower interest rate than the one that they were making payments on before. So you can consolidate your loan. Second is home repairs, improvements. If you have damages, if you've been through a flood, if you've been through any type of natural disaster, or if you're fixing and flipping, if you're remodeling your home, then personal loans can come in right here as well. If you're a fix and flipper, if you're in real estate, a lot of people utilize this. Medical expenses. Medical expenses are a burden, and a lot of people get strapped with these. So personal loans can come in and help during crisis, during emergencies. And the last thing is for startup capital, which is exactly what our client did when she used it for her limo business. For clients who have minimal time in business, because banks and lenders, they typically want to see a year or more. If you don't have that, or if you don't have your business financials together, then you can start looking into options like a personal loan. But remember, you want to shop around because you want to find the one that's going to be the right fit for you. You don't have to necessarily take the fastest money that you can find. You want to find the one that's going to fit what you're going to be able to work with. And there's 3 types of lenders that you can shop around at. That's traditional banks, credit unions, and online lenders. I recommend you already start with the one that you're familiar with, which is your traditional bank, where you have your checking account, where you have your savings account, where you go in every other week, right? Go there, start there. Even if you don't qualify right now, you can start building relationships with your banker. Even go to your credit union, open an account with your credit union as well as a larger institution, and start establishing relationships there. Because as your business grows and your deposits into your account grow, then the bank will take notice and you'll be able to get some more opportunities down the road. And online lenders are great, but the biggest problem with online lenders is they're very algorithmic. So if you're going through an online application, if you've ever tried that before, you put in your business information, you answer a few questions, and typically they'll either give you an approval or not. Now, what happens with a lot of those is they're very transactional. They have systems set up, and pretty much they're going to shoot your information out and to a bunch of lenders, right? So what can happen is now you're starting to get hit from all these different people. You might even start to get hard inquiries on your personal report because now you don't know who's actually running your information. So be very careful with these online lenders. Use platforms like DFX that work with a network of established lenders and have facilitated over $5 billion in capital. Don't shy away from online lenders because a lot of them are really great, but you just want to make sure that you're doing your research. You don't want to apply constantly with all of them, okay? Lenders talk to each other and they can see what you're doing as well. So make sure you check out platforms like DFX where we can speed up the process. Number 6 is you want to pick your lenders and then apply. Now you've done your research, now you've done your due diligence, and you're finally at the application stage. The great thing about this is a lot of lenders have this information, their application, online. But remember, you want to be careful. You don't just want to apply with anyone because they're not all a one size fits all. You want to have some things on hand. So you want to have pay stubs, you want to have tax returns if you're self-employed, pay stubs if you're W-2, but you want to have these things on hand to speed up the process. If you're asking for large amounts of money, well, you have to prove that you can pay it back. It's just part of the process. So be prepared to provide your documentation. And a good way to look at it is if they're asking you for more documentation, well, it means that they're really considering your application and trying to make it work. So the more prepared you are, then the more likely your chances are of getting approved. Number 8 is now you've been approved and you got to start making payments. So after everything's been approved, you've read through your terms, you've accepted the offer, and the lender has dispersed your payment. Make sure you stay on track with your payments. If you have the option to pay it off, then you should take advantage of it. Keep good relationships with your lender because I have seen lenders open up twice as much funding, sometimes even 3 times more funding the next time after the client proves that they can make their payments on time. When you accept the funds, you typically can get funds within a matter of days. You can get it within a week. You could probably get it within 30 days depending on the size of the loan. But remember, always make your payment. If you can do a little more than the minimum payment, that helps as well. All right, guys, well, that's it for today. If you found this video helpful, then go ahead and hit that like button and that subscribe button. Now I need you to do 2 things. Go ahead and download your free business building credit guide. It's a step-by-step guide on how to build business credit, and it's a very easy, simple guide that answers any questions that you guys have on how to get started. And the second thing I need you to do is go ahead and schedule your free funding session to get your current business blueprint. All right, guys, if you found this video helpful, then share with your network, and don't forget, hit that subscribe button because then the YouTube algorithm will let me make more free courses and trainings just like this one. See you next time.